Welcome to AI Decoded, the podcast that demystifies artificial intelligence and explores how it's transforming our world. And before we begin, here's something that makes this show truly unique. AI Decoded is the first podcast about artificial intelligence created by a supervised AI. That's right. Every episode is written, structured, and produced with the help of AI, guided by human experts, to bring you not just the most up-to-date and relevant content, but insights that are accurate and focused on what you really need to understand. I'm Emma Clark, and I'm thrilled to be your guide on this journey into one of the most transformative and fascinating technologies of our time.
And I'm Michael Reynolds. Whether you're an AI enthusiast, a tech professional looking to stay ahead of the curve, or just someone curious about all the buzz around AI, this podcast is for you. We're here to break down the complexity, demystify the jargon, and show you how AI is changing the world, one innovation at a time.
Our goal is simple: to make AI accessible and relatable for everyone. You don't need a PhD in computer science to understand this podcast. We'll take you through the basics, walk you through real-world applications, and explore what AI means for your career, your business, and your daily life. The financial industry is one of the biggest adopters of AI. Whether it's fraud detection, automated trading, risk assessment, or personalized banking, AI is revolutionizing the way money moves around the world.
That's right, Emma. AI-driven financial systems process trillions of transactions every year, analyzing massive volumes of data in real time to prevent fraud, predict market movements, and even make automated investment decisions. And it's not just large banks and hedge funds using AI. Fintech startups, payment processors, and even small businesses are leveraging AI-powered financial tools. According to PwC, AI in the financial sector will generate over $1.2 trillion in cost savings and revenue boosts by 2030. So let's break down how AI is transforming financial services.
Let's begin with one of the most mission-critical areas in financial services: fraud prevention and cybersecurity. This is where artificial intelligence isn't just helpful, it's absolutely essential. With digital payment volume expected to surpass $11 trillion globally this year, the attack surface is massive, and criminals are getting smarter. Fraud is a $40 billion problem globally, and it's evolving faster than traditional systems can keep up with. A single breach or identity theft can trigger massive financial and reputational losses. The old rule-based systems, flag any purchase over $500 made abroad, just don't cut it anymore. AI has turned fraud prevention into a real-time intelligent defense system.
Exactly. Today's artificial intelligence models don't just react, they anticipate. They're trained on millions of historical transactions and can spot even the tiniest anomalies using techniques like graph-based artificial intelligence models, also known as graph neural networks, GNNs, federated learning, and edge AI.
Wait, graph-based AI? Break that down for us.
Sure, imagine fraud detection as a network of relationships. Graph neural networks, or GNNs, map out the relationships between accounts, devices, geolocations, and transaction patterns. So instead of looking at transactions in isolation, the model sees them as part of a broader web. If two accounts suddenly start behaving like a known fraud ring, the AI flags it, often in milliseconds.
That's like having Sherlock Holmes baked into the code, and the results are game-changing.
Mastercard's AI fraud system uses GNNs to identify hidden fraud rings across billions of transactions. It slashed false declines, those annoying card-blocked moments, by over 50%, and blocked over $20 billion in fraud last year alone. And it's global. In India, Razorpay integrated AI-based fraud detection for the unified payment system and card transactions, reducing fraud by over 70% in just 12 months. Their model uses device fingerprinting and IP reputation mapping to stop fraud before it starts.
Financial institutions are using AI to secure not just money, but identities too. JPMorgan's AI systems scan billions of signals per day, including network traffic, device access logs, and behavioral patterns. When it detects abnormal patterns, like a login from two countries within minutes, it automatically blocks access. This AI-first approach has helped cut losses from cyber attacks by over $500 million annually.
And it gets even more personal. Companies like BioCatch use behavioral biometrics to verify users not by passwords or PINs, but by how they type, scroll, and move their cursor. If someone else is pretending to be you, AI knows. They have trained its fraud models on over 200 million user profiles and prevented more than $1.5 billion in fraud attempts globally.
Federated learning. Can you explain that for those of us who aren't deep in the weeds?
Sure. Think of federated learning as a way to train a fraud detection model across multiple banks or platforms without ever sharing customer data. Each institution trains the AI locally, and only the insights are pooled together to improve the global model. It's private, secure, and powerful.
So one bank in Singapore and another in Brazil can collaborate to stop a cross-border fraud ring without ever sharing a single user's data.
Exactly, that's the magic. This is especially useful in real-time cross-border payments, where patterns are distributed and evolve quickly. SWIFT, the Global Payment Network, has been testing federated AI models to detect transaction laundering and layered payments across partner banks. Early results show a 30% increase in early fraud detection, reduces compliance lag by 40%, and keeps user data private while surfacing systemic risk patterns.
That's impressive. But what about mobile transactions? Fraud on smartphones is exploding, especially with wallets and super apps.
Enter Edge AI. Instead of sending every transaction to the cloud for analysis, banks can now run AI models directly on your device in milliseconds. This is how apps like PhonePe in India and KakaoBank in South Korea flag suspicious logins, screen fake biometric inputs, and prevent payment rerouting before it even leaves your phone. PhonePe uses AI on-device to scan for SIM card swapping, root access, and app tampering. It detects fraudulent behavior with 92% accuracy at the edge and supports over 4 billion transactions monthly.
So your phone becomes the first line of defense, and it's powered by real-time AI.
Exactly. And to push things further, some banks are now experimenting with AI-driven honeypots, fake financial environments designed to lure and study fraudsters.
Wait, fake banking environments?
Yes, these are deception systems. AI observes how attackers move through the fake environment, which phishing payloads they use, and how they attempt to escalate privileges. This intelligence is then used to retrain fraud detection models. In Brazil, PicPay deployed AI honeypots to study fraud bot behavior, discovering 38 new fraud bot signatures in 3 months. They trained their real-time detection models to intercept similar patterns on their live platform, resulting in a 36% drop in successful fraud attempts.
That's like using bait to train the guard dogs. Clever.
And the results speak for themselves. But here's where it gets even more forward-looking. Collaborative AI fraud orchestration.
Sounds futuristic. What is it?
Banks are now piloting multi-agent AI systems that talk to each other across institutions in real time. So if a fraud ring hits Bank A in Berlin and Bank B in Lagos 12 hours later, the AI systems flag, cross-check, and automatically adjust fraud detection parameters without human intervention. The European Banking Federation multi-agent AI deployed across 5 banks in Europe, detected coordinated phishing attempts across borders, reduced response time from 48 hours to under 90 seconds, and the entire system operated under GDPR-compliant privacy layer.
So we're heading toward a world where AI agents guard the gates, not just inside one company, but across the entire financial network.
Exactly. And as synthetic fraud, fake identities generated by AI becomes more sophisticated, the defensive models will need to simulate adversarial attacks. Think GANs, generative adversarial networks, used not to create deepfakes, but to simulate new forms of financial fraud so that the detection models stay one step ahead.
So the future of cybersecurity isn't human versus hacker, it's AI versus AI.
And it's happening already. The battleground has shifted. Now the winners are the ones who can predict, simulate, and defend at machine speed.
And this isn't just for banks, right? Fintechs, credit unions, even online marketplaces need this level of protection.
Absolutely. The attack surface is everywhere, but with AI, especially federated learning, edge AI, deception systems, and multi-agent collaboration, defenders are finally catching up.
Or even getting ahead. All right, Michael. Let's dive into one of the most high-stakes areas where AI is shaking things up: investing and trading. Wall Street isn't run by wolves anymore. It's run by algorithms.
That's true. Algorithmic trading has been around for decades, but what we're seeing now is a complete transformation. We've moved from rule-based systems to AI models that learn, adapt, and optimize in real time across thousands of data sources.
We're talking deep learning models that can read news headlines, track market sentiment, even analyze satellite images of shipping activity, all in milliseconds. It's a different game.
Exactly. Let's break it down. AI trading systems today use recurrent neural networks and reinforcement learning to simulate and learn from thousands of market scenarios. These models can recognize complex patterns in price movements, macroeconomic indicators, and even investor behavior. JPMorgan developed LOXM, an AI-powered execution algorithm that mimics human traders, but faster. It uses reinforcement learning to determine the most efficient execution strategy for large trades, minimizing market impact. It's improved execution performance by over 20% compared to traditional systems. The bank reported faster settlement, reduced slippage, and tighter spreads.
That's wild. And it's not just institutional players, right? AI is democratizing investing, even for everyday people. These platforms use machine learning to automate portfolio management for retail investors. They monitor market movements in real time, rebalance portfolios, and optimize tax strategies automatically. Betterment reports that its AI-driven rebalancing improves investor returns by up to 2.66% annually.
And globally, we're seeing similar innovation. In India, platforms like Grau and Smallcase use AI to guide young investors toward thematic portfolios like green energy or emerging tech. In Europe, Scalable Capital uses a dynamic risk management algorithm to adapt portfolios based on volatility, using AI to protect investors in real time. Ant Financial, part of the Alibaba ecosystem, runs one of the world's largest AI-driven investment platforms. Its Kaifu House system uses deep learning and user behavior data to recommend portfolios for over 80 million retail investors. It can personalize financial advice at scale, adapting in real time to spending patterns and risk tolerance.
Let's zoom in on the tech behind these strategies. What kind of AI models are powering them?
We've got a range: convolutional neural networks, CNNs, to recognize visual patterns in technical stock charts. Natural language processing, NLP, to digest financial news, earnings reports, and even CEO sentiment in earnings calls. Sentiment analysis engines scanning social platforms like Reddit and Twitter to detect shifts in investor emotion.
So, if Reddit explodes with bad news about a stock, the AI might short it instantly?
Exactly, and not just Reddit. Some models cross-reference Reddit trends with Google search spikes, options flow, and news sentiment to build a real-time trading signal. For example, a spike in negative sentiment on Twitter about a major airline might trigger a short position in milliseconds.
So, it's not just about data, it's about interpreting context at scale. I read that BlackRock's Aladdin platform now monitors over $21 trillion in assets, using AI to assess portfolio risk, run stress tests, and model thousands of economic scenarios.
Yes, and it simulates everything, from central bank decisions to geopolitical events. Aladdin integrates predictive analytics and scenario-based forecasting, helping fund managers navigate uncertainty. Used by over 240 institutions worldwide, reduces risk modeling time from days to hours using parallel AI simulations, and helps optimize asset allocation and improves long-term fund performance.
And let's not ignore the human factor. One of the biggest strengths of AI trading is that it removes emotional bias. It doesn't panic, doesn't get greedy, doesn't trade on FOMO.
Exactly, it's all probability, not psychology. Studies have shown that AI-driven funds outperform human traders, especially during high volatility periods, because algorithms don't flinch. And the frontier is moving fast. Platforms like QuantConnect and Numerai are letting data scientists worldwide train and deploy their own AI trading strategies, turning hedge fund alpha into open-source intelligence.
Wait, so a data scientist in Sao Paulo could build a strategy that powers a hedge fund in New York?
Yep. And if it performs well, they get paid. It's like the GitHub of hedge funds.
Mind-blowing. So whether you're running a billion-dollar fund or just want to auto-invest your paycheck, AI is changing the rules of the game.
And the shift is accelerating. We're seeing early-stage models that integrate generative AI into trading, creating synthetic datasets to train on rare market events, like 2008-style crashes or COVID shocks, so the AI can simulate responses in black swan scenarios.
So it's not just predicting the future, It's preparing for every version of it.
Exactly. And with advances in quantum computing, we may soon see AI systems evaluating millions of trading paths in parallel, in near real time. It's like going from a calculator to a crystal ball.
Okay, that's both thrilling and slightly terrifying.
It depends on who's holding the crystal ball.
All right, we've seen how AI is optimizing trading and investing, but let's bring it down to a more personal level. What about everyday banking?
This is where AI is quietly changing lives. Think about how you interact with your bank today. It's not through a teller or a phone call. It's through a chatbot, a push notification, or a spending alert. That's AI.
One of my favorite examples is Erica, Bank of America's AI assistant. She's like a financial Siri, except smarter. She doesn't just check balances. She gives spending advice, alerts you to unusual activity, and even nudges you to save. Over 100 million customer interactions to date, powered by natural language processing, NLP, to understand complex financial queries. Helps users budget, identify recurring charges, and even predict cash flow shortfalls. BofA reports that Erica's usage has grown 300% year over year, with customer satisfaction exceeding 90%. And NLP is what makes Erica conversational. It's trained on millions of voice and text queries, so it understands not just what you say, but what you mean. The system even adjusts recommendations based on your behavior over time, so instead of generic, "you spent $400 at restaurants this month," it's more like, "your dining spend is 23% above your usual trend. Want help cutting back next month?"
Tink in Sweden uses AI to connect financial accounts across providers, offering real-time spending insights, savings nudges, and credit predictions. It has increased savings plan adoption by over 35% among European users and licensed its AI engine to 300-plus banks across the EU. Tink's AI doesn't just show you your balance, it understands your habits. For example, if you tend to overspend after payday, it might automatically move funds into savings first or recommend a limit on discretionary purchases.
That's behaviorally intelligent banking. But where AI really gets interesting is credit scoring, especially for people with limited financial histories.
Yes, traditional credit scoring systems like FICO rely heavily on historical data, credit card usage, loan history, repayment behavior. But that leaves out millions of people who don't have formal credit histories.
Which is why alternative AI-based credit scoring is such a game changer. Upstart uses machine learning to analyze over 1,600 variables, including education, employment history, and even browsing behavior during loan applications. Reduced loan default rates by 27% compared to traditional models, expanded credit access to 27% more borrowers, especially Gen Z and gig workers.
And here's where it gets fascinating. Upstart's models are built using gradient boosting algorithms, which outperform linear scoring models. But more importantly, they include bias detection layers that test the model's outcomes for fairness across gender, race, and age groups.
That's huge. AI that not only scores, but self-audits. Another leader in this space, Zest AI, builds explainable credit models for lenders. Their platform applies machine learning with bias mitigation techniques, ensuring underserved borrowers aren't penalized by legacy scoring assumptions. Credit unions using Zest have reported approval increases of 25% without increasing risk.
And globally, it's even more impactful. In Mexico, Quesky uses AI to offer microloans based on mobile data, e-commerce behavior, and payment patterns. In Kenya and the Philippines, Tala and Tonic Bank are scoring borrowers using smartphone metadata, app usage, and transaction flows.
You mean someone with no credit card or bank account can qualify for a loan just based on how they use their phone?
Exactly. These models look at things like app installs, message patterns, and repayment behavior across mobile wallets. And it works. Tala has disbursed over $3 billion in microloans across emerging markets.
This is financial inclusion powered by AI. People who were invisible to traditional finance are now getting access to capital.
And it's not just about access, it's about accuracy. AI models have proven to reduce both false positives and false negatives in credit assessments, making lending safer for banks and fairer for borrowers.
But this also raises an important point: transparency. If an AI model denies you a loan, you deserve to know why.
Exactly, and that's where explainable AI XAI comes in. Platforms like Zest and Upstart now generate human-readable explanations for every lending decision, showing which features mattered most. That builds trust and regulatory compliance.
And it sets the stage for what's next. Fully personalized banking experiences, where your financial plan evolves daily, powered by an AI that knows you better than your financial advisor ever could.
And never sleeps, never forgets, and never judges.
I'll take that kind of advisor any day. All right, Michael, we've covered fraud detection, trading, banking, and credit scoring. But let's zoom out. What's next? Where is all this going?
We're standing at the edge of a financial revolution. In the next 5 to 10 years, AI won't just support financial services, it'll define them. And it starts with what some are calling AI-powered financial consciousness.
That sounds like a sci-fi movie. What does it actually mean?
It means real-time, continuous financial coaching. AI that understands your spending habits, savings goals, emotional triggers, and even your values. Not just don't overspend, but based on your values, let's reallocate your budget toward things that matter more to you. Imagine waking up to an AI that says, your rent is due next week, and you've been spending 18% more than usual on dining. Want to adjust now to avoid overdrafting? Platforms like Clio and Yolt are already laying this groundwork. Future models will be powered by reinforcement learning and personalized behavioral finance, learning not just from data, but from you.
That's hyper-personalization. But with large language models like ChatGPT or Claude now evolving fast, couldn't we get an AI financial advisor instead of just an assistant?
Absolutely. Generative AI is stepping into advisory roles. Picture this. You ask, should I refinance my mortgage? The AI doesn't just pull rates. It runs simulations based on your income, debt profile, credit score trends, and even regional economic forecasts. Then it replies in plain English, tailored to your tone and goals. Firms like Wealthfront and Intuit are experimenting with large language models-powered financial advisors, merging natural language capabilities with proprietary financial engines. The goal? Eliminate jargon, offer strategic, explainable guidance instantly.
And because it's conversational, people might actually use it. Let's be honest, most people ignore their budget apps after week 2.
Exactly. The future of finance is frictionless, friendly, and always on, and that applies far beyond personal finance. The next phase of AI in finance is all about integration, merging insights across departments, platforms, and even ecosystems. But it's also about building trustworthy, autonomous systems that serve people, not just profits.
Let's start with something a lot of people care about: values. Can AI help align finance with sustainability?
Absolutely. AI is becoming a game changer in ESG investing. That's environmental, social, and governance. These are non-financial factors investors use to assess company impact.
Right, but ESG data is messy. It's scattered across PDFs, news articles, regulatory filings.
And that's where AI shines. Large language models like ChatGPT are being fine-tuned to extract insights from unstructured ESG content. Everything from diversity metrics in hiring reports to supply chain emissions. Arabesque S-Ray is a global ESG AI platform that uses machine learning and NLP to rate over 8,000 public companies across ESG factors. It processes 250-plus data sources in real time, helping investors flag greenwashing and surface hidden risks.
So it's not just checking a box, it's building a more intelligent way to allocate capital toward impact.
Let's talk about decentralized finance, or DeFi, and how AI's role there is about to explode.
Right, DeFi is like the Wild West of finance right now. Tons of potential, but tons of risk too.
That's where AI steps in. As smart contracts become more complex, AI will help manage them, monitoring for vulnerabilities, fraud attempts, and performance issues in real time. Platforms like Aave and Compound are exploring ways to integrate AI for real-time risk monitoring of liquidity pools, dynamic interest rate optimization, smart contract security analysis using AI-powered code review tools. This could help scale DeFi from a fringe niche to a mainstream financial ecosystem.
That's powerful and honestly necessary. But what about macro-level impact? Can AI help us predict or prevent major economic events?
That's the holy grail: AI-driven systemic risk forecasting. Right now, central banks run stress tests using past scenarios, but AI models, especially when combined with quantum computing, we'll be able to simulate millions of hypothetical economic outcomes in parallel. Research labs at HSBC, IBM, and Alibaba are already testing quantum-enhanced AI for market crash prediction, cross-market correlation mapping, and global capital flow simulations. This could allow governments and financial institutions to spot systemic vulnerabilities before they trigger a crisis.
It's like Minority Report for financial meltdowns.
That's one way to put it. And on a micro level, we'll likely all have personal AI financial agents. Persistent, secure, and deeply integrated.
Like a ChatGPT that knows my salary, goals, emotional spending habits, and adjusts in real time?
Exactly. It'll help you file taxes, optimize your investments, renegotiate your insurance, all while keeping your data encrypted and private. Think multi-agent AI systems working in the background to improve your financial life autonomously.
So, the future of finance is not just digital. It's intelligent, proactive, and deeply personal.
And accessible. With the right infrastructure, this isn't just for the 1%. It's for gig workers in Nairobi, students in Bogota, small business owners in Jakarta. AI makes financial tools scalable and equitable in a way that was never possible before.
All right, let's talk about the elephant in the room, regulation. If AI is making lending, investing, and fraud decisions, who's accountable?
This is critical. Governments are pushing for what's called algorithmic transparency and auditability. New laws in the EU and UK already require explainable outcomes, fairness tests, and opt-outs for fully automated financial decisions.
And in the US, the CFPB is now reviewing AI lending models under the Equal Credit Opportunity Act. It's getting serious.
As it should. And companies are responding with AI compliance engines, software that continuously audits models for bias, drift, and unfair outcomes. Fiddler, EAI, in the US, provides real-time explainability and fairness dashboards for financial institutions and monitors how model behavior changes as markets shift, generating compliance-ready reports for regulators and internal teams. So the goal is AI that's not just powerful, but responsible. And that future isn't far off. It's already being built in Brazil, India, Europe, Africa. Financial AI isn't just a trend. It's the infrastructure of tomorrow's economy.
So, what have we learned today? AI is helping fight fraud across borders in real time with federated learning and edge AI. It's transforming investing through reinforcement learning, synthetic market scenarios, and community-built quant models. It's making personal finance more inclusive, with AI-based credit scoring for billions of underbanked individuals. And it's setting the stage for a future where finance is autonomous, global, and intelligent, but also needs ethical guardrails. If you enjoyed today's episode, make sure to subscribe so you never miss an update. And if you found value in our discussion, share it with friends, colleagues, or anyone curious about the impact of AI. Spreading awareness is one of the most powerful ways to create a better understanding of this transformative technology.
Until next time, keep exploring, keep questioning, and keep decoding AI. This is Michael Reynolds.
And Emma Clark, signing off from AI Decoded. See you next time.